obviously the topic there today is passive income to expand your business. Obviously, this is our last presentation for the year as we head into the festive season. But to start off, let's say, did you know that Global Entrepreneur Week ran from the 8th to the 14th? Did you know that? 14th of November. The whole idea was to celebrate millions of brave innovators who launched startup businesses and things like that. I know some of you might be business owners on this webinar, and I know some of you might be thinking of starting your own business, but I presume also majority of you are employees. But being an entrepreneur is not easy, and we'll touch on it a bit later. But you need to bring ideas to life and obviously make them profitable. Therefore, having passive income, and that's the whole gist of this presentation today, to support your small business is a savvy idea. So investing in shares can help you earn passive income that can obviously stretch your potential as of your enterprise or your company. So obviously in this context today, there are a lot of other ways of making passive income, be it rental property or starting your own blog online and things like that. In this context, obviously we're focusing on using the share market as a vehicle to create passive income. So saying that, having passive income obviously ensures more financial freedom, and as I say, we'll elaborate on this a bit later. It also releases you from traditional workday to provide alternative investment opportunities to make money, and that's my aim of this presentation, just to show you alternative investment opportunities as a business owner. So as a business owner, obviously passive income might serve as a good backup income, and that's what we're going to touch on also. So in addition to giving you time back, passive income also can help you focus on worthwhile financial goals, such as securing funds for retirement. And as I mentioned just now, as we head into the festive season, we've got Black Friday this week, this Friday, obviously with Thanksgiving tomorrow, and it's always to me the start of what you call the festive season. So those of you that might be in retail, obviously you're looking forward to a bumper Black Friday. Some of you that are in the leisure industry or in the tourism industry, obviously also looking forward to the festive season. We just hope we don't have any restrictions regarding travel and lockdown and things like that with the so-called fourth wave happening soon. So yeah, there's a lot of unknowns, but I also always say there's hope is not a strategy, so we need to have a plan, and this is what I'm going to talk about today. So here's our agenda. Sorry, let me just go into this. Oops, went too far. There we go. So there's our three topics as always, and my goal here today is obviously just to show you how the share market can help you create that passive income. So what are the benefits of passive income? Obviously, you know, some of this might be very basic to a lot of you, but just think about it this way. Personal income is the greatest wealth generating tool. You as an individual being able to work. So it's something that it requires individuals' active participation. So if you can be able to work, that is your best asset as such. But saying that, you know, we're talking about active participation, which translates into active income. So active income obviously encompasses your monthly salary, tips, commissions, everything that's earned from services from material participation. So a consistent paycheck earned by a teacher or accountant, or payments for services like plumbing, are all examples of active income. Okay, so the earner must work on a continuous and consistent basis. That's what we call when we talk about active income. So if you're currently earning an active income but have dreams of an easier or happier lifestyle, you might benefit from obviously building a passive income. So whether this means starting an online business, as I mentioned just now, like a blog, or renting out a property, there are plenty of passive income options that can help you achieve your monetary goals. So the main thing here, even if you're in a full-time job, okay, or even if you own your own business, I think anybody would welcome additional income without necessarily having to sweat for it. I think you guys would agree with that. So developing a way to generate passive income provides many benefits, and we're going to be touching on that. So With additional income, obviously an individual can expand their wealth building base, number one. Number two, obviously it can help you with, call it early retirement, for example, or provide more choice. And that's what I want to also highlight for the business owners, give you more choice or more flexibility. So passive income refers to any source of revenue that you receive without active involvement. Okay, so it refers to payments you continue to receive after the work's been done. And we'll be touching on that a bit later. Passive income doesn't always have to come from creative endeavor. Okay, this obviously refers to categories like, as we mentioned just now, rental properties or interest payments. So because these types of payments do not require a high level of ongoing activity, you can set up multiple income streams. And that's also what we want to highlight, setting up multiple income streams. So ultimately, obviously, multiple income streams leads to consistent improvement in cash flow. And I know those of you that are business owners, cash flow, they say that is the lifeblood of your business. Okay, so passive income is generated on its own after an income stream has been established. So however, just saying that, it's not a get-rich-quick scheme. And then I want you to highlight it for you guys. It's not a get-rich-quick scheme. In most cases, obviously, there's some form of initial investment or work that was involved, but then obviously it leads to you eventually earning money and be able to do other things. Okay, so what is passive income? We've touched on this already very briefly. Is this any source of revenue that you receive without active involvement? Okay, so it's after the work's been completed. That's what I want to highlight there for you guys, cash flow. Okay, so I'm just trying to move this out the way here. So what is passive income? Why is it important as a business? Obviously, improved financial stability. This is obviously from business point of view. If you can weather a strong financial storm like we saw in the last 20 months, I think you can be able to handle anything. But also think about those people that did not have an emergency fund or did not have anything to fall back on. Okay, so I hope we've learned our lessons from that, and this is the idea we're talking about here. So be able to count on a situation where you have incoming money coming in all the time without you having to work for it. That would be the ideal situation. Obviously, more financial margin. What I mean by that is that you might have expenses of for example, 30,000 a month, and you have income of 40,000, so your margin is 10,000. But that's not bad. But imagine if you have an extra 10,000 rand per month. And that obviously makes life much easier. That's what I mean by financial margin, just having an additional cash flow coming in. It also obviously improves your financial consistency, from consistency saving to consistently investing to consistently giving. The more passive income you develop, more income streams you develop, the easier it becomes to stay consistent in your financial life. And it's a no-brainer, but obviously, I think it leads to reduced stress or reduced anxiety. Your increased financial stability and margin and freedom obviously would lead to, I would assume, less stress. So it just helps alleviate that worry about having to pay those bills. Okay. And then obviously frees up your time. If you've got a situation, and we have touched on this way before on other webinars where we talk about financial freedom. Financial freedom was in a situation where your income is exceeding your expenses. It frees up more time. Okay. And then obviously also it enables you to pursue your passions. You might be actively involved in your church. You want to be more actively involved in charity and things like that. So you might want to start other businesses, online businesses, and there's a lot of other ways of doing it. So you can pursue your passions. Okay, you can start. I always say, it makes society better, and obviously improve improve a better quality of life for everybody. Okay, so let's get on to the more than nitty-gritties. So what you must consider when investing in shares as a business owner? So first of all, I want you to highlight just excuse me. The idea is to make money in your sleep. That's the ideal, what I call passive income. But obviously it takes a lot of work up front. So this includes obviously spending a considerable amount of time engaged in active income, okay, and getting your active income streams going. So it does take some time in the beginning, but once you've learned how to make passive income, it'll help you for many years going forward. So, sorry, if time this thing keeps on popping up, pressing the wrong button somewhere. Okay, there we go. So as mentioned just now, some of you might be considering starting your own business. I know some of you on this webinar are already business owners, but those of you that are maybe considering your employees and starting your own business, there are a lot of reasons for starting your own business. I think for a lot of people, it's just being your own boss, being your own CEO of your own company. You don't have to worry about transport. You don't have to worry about commuting in the traffic every day and taxis and things like that. So that kind of stuff. There are a lot of ideas, and the main, I think, to a lot of people, we're talking about tax benefits. If you look at individual tax rates compared to your company tax rates, there's benefits there. Job security. I think there's a lot of unknowns now with this whole COVID lockdown. With mandatory vaccines for some companies. I think starting a side business part time. Will create, give you that true job security, something to fall back on. But also, ultimately, if you start your own business, you're going to put on a lot of different hats. You're going to be a financial guy, you're going to be a marketing person, you name it. So you're going to increase your skills. Okay, so I'm not going to go into too much detail there. You can go see there's a lot of information out there for you guys on reasons for starting your own business. But let's move on to this. What do you consider when investing in shares as a business owner? Now, I really racked my brains about this. As a business owner, there's pros and cons, and we're talking about investing in shares. So first of all, what comes to a lot of people's mind, as I mentioned just now, would be the company tax rate. So the company tax rate is 28%. Just understand that although the capital gains forms part of the income tax, there are two different taxes are not really integrated. So, you'll be paying normal company tax rate of 28%, but it's only 80% of those gains are included as taxable income. So what means that from a capital gains point of view, for a company, you're actually paying more. The effective capital gains tax rate for companies is more than an individual, because it's 80% of the company tax rate, which works out to 22.4%, as opposed to as an individual. Yes, we're paying a higher tax rate. Okay, the marginal tax rate is 45%, but we're paying 40% of that. Remember also, you got your first 40,000 is excluded. Your first 40,000 of profit will be excluded out of that calculation. But you can see there for individual, it's 18%. So coming back to, if you're looking at starting a business and just buying and holding shares as a company, just understand that your effective tax rate might be a bit higher. But what is one of the major advantages is that companies are exempted from the dividend withholding tax. That's if you obviously apply for it and things like that. But you're not going to be paying that 20% on dividend tax. Okay. So as I mentioned, there are pros and cons. You have to weigh up the admin costs, or the admin versus the costs versus the benefits. Yes, you can take all the expenses that you use to generate the income. You might say, okay, as an investor with PSG or a trader with PSG, I could take the Viewpoint subscription, I could take my business day subscription, all my courses I do on stock market education, all the seminars I attend that I pay for, all the books I buy, all those kind of things. Yes, I can use it as an expense and offset it against the income. But also you have to take in consideration, you have to appoint a tax accountant. Okay. And this is a FAMSAC. I heard that they charge between 180 and 1,200 Rand per day, but let's work on 2,000 Rand a year for them to draw up your financials and obviously submit your tax returns and things like that. And also you've got other little fees like your CIP fees, which I understand is at least 450 a year. So there's pros and cons. That's what I want to highlight here for you guys. Okay, something for you to work on. But saying that, how do we invest your small profits and where? So we touched on this last month, just as a ballpark. Let's say, for example, I want to create, going back to my example just now, how much would I need to invest to receive 10,000 Rand in extra income a month over 10 years? Okay, and we touched on this last month with different ways of looking at it. I can save $1 million for every 5,000 Rand I would need. So in this situation, I need 10,000 Rand divided by 5,000. I need 2 million rand as a starting point to get 10,000 rand a year. Okay, 10,000 rand a month. Okay, that's a starting point. You can also use what we call the withdrawal rate. So 10,000 rand, 10,000 rand times 12 months is 120,000, and we're working on a 5%, which is a safe withdrawal rate, assuming that inflation and things like that is 6%. So 6% plus our 5%. So that's how we're talking about that. But we'll need a ballpark figure around about 2.4%, 2.4 million. You can also look at a third way of calculating. Whatever your income is that you're looking at, multiply by 300, gives you a ballpark of about 3 million. You can see between 2 and 3 million rand you would need to invest to give you that 10,000 rand a month. Now, I want to use this 5% as an example, and we were touching on it just now when we're talking about investing for dividends, because that's a lot of people will think is one method of doing it. But here's three ways in the context of investing in shares or equities. First of all, obviously through a unit trust account, what we call a voluntary investment plan. So depending on your risk profile and depending on obviously how long you're investing, the longer your time horizon, the more risk you can take on. The more your risk profile is more moderate to conservative, you would say, okay, I want to concentrate more on income funds or money market funds. More prudent approach would be looking at what we call multi-asset or asset allocation or balanced funds. Those of you a bit more aggressive and have a longer view might have more exposure to the equity market. Okay, that's unit trust. You can also open up a local share trading account, and depending on your investment style, you might be a value investor, you might be a growth investor, you might be investing for dividends, or you might be a combination of all of them. Okay, so that's what you call a buy and hold investor. Also, I want to take it one step further, and this is where those of you that understand that a lot of entrepreneurs or business owners take on risk. Okay, yeah, we're talking about taking on calculated risks, and yeah, I'm suggesting also looking at maybe opening up derivative trading accounts. You can either have CFDs, single stocks, or currency futures account, or all three of them. Okay, so here's just to give you an example of unit trusts. The performance, I did it on interest-bearing funds, I did a multi-asset funds and equity funds. These are just the top three I took. You can see what the performances over those different periods. So if you're saving for at least 12 months in the active fund, you can see there 9.88. Okay, so to withdraw your 5%, yeah, you'll be able to do it. Okay, a multi-asset funds, you can see over 12 months, you'll be able to do your 5% a year. Okay, 5%, yeah, 5% a year. To give you that 10,000 rand. You can also see your equity funds. So you can see the performance over the last 12 months. But saying that, okay, obviously there's no promises, there's no guarantees. Past performance is not an indicator of future performance. It just gives you an idea what is possible. Okay, but also to highlight this for you. This is an example of an existing share portfolio. This is buy and hold strategy by an investor. They started this particular portfolio started in October 2018, so exactly 4 years ago. Okay, so you can see he started out roughly about 250,000, and you can see his portfolio is nearly 642. So not bad. 256 growth, 256 growth over that time period. Okay, so that's a good stock picker. You can see also the kind of shares in this portfolio. You can see also the amount of shares. Okay. Just as a side, over this time period, you only received 5,078 rand in dividends. And now you'll see the next few slides how those all added up. At that time period, you also paid dividend withholding tax on that. So he paid 1,015 rand in dividend tax. So his net dividends was 4,000 rand. Okay, so I just want to highlight for you guys. A lot of people think, oh, I want to invest into dividends. Okay, so here we go. There you can see that goes from, there's 3 slides on this. This goes from the most recent, on the 22nd of October. He received dividends on his 14 capital, on his Capitec shares, 168 rand. 20% of that was his 33 rand 60. So you see for that time period, that's what he received, and that's what his dividends withholding tax. This is the next slide. Going back, now we're going back into 2019, and then right back in, as I say, we started roughly about October 2018. But you can see, okay, you received 5,000 rand in dividends, and you paid 1,000 rand in dividend withholding tax. The point is, If you're aiming for a portfolio just aimed at getting dividends and not touching your capital gains, obviously we need quite a big portfolio first of all, but you need to be aiming for at least a 7% average dividend yield. So less your 20% dividend yield, which is 1.4, you're going to ending up with on average 5.6 dividend yield. So you have to be searching for those companies that are giving you those dividends all the time. Okay, so that's one way of creating passive income. But obviously, the bigger the portfolio, the better. But I want to also highlight for you, and I mentioned this just now, is the investing into derivatives. There's 3 different ways of looking at it. The nice thing about investing in dividends, in derivatives, you don't need a lot of capital. So they're capital efficient, number one, because of the gearing. Okay, so first of all, we got CFDs. I like CFDs. There's often we talk about the different styles of investing, being a value investor, a growth investor, etc. We also have different styles of trading. So it depends on your time and available. So contracts for difference are ideal for someone what we call position trading, because there's no expiry dates like in single stock futures. CFDs are great for a bit more of a longer term buy and hold strategy, call it that, from a trading point of view, because there's no, as I say, no expiry date. There's no to worry about a futures closeout. You can hold it for a bit longer. It's ideal for a buy and hold longer term long position. Okay, so with CFDs and single stocks, we only take the top 100 companies. So these are better companies, been around for a long time, and things like that. CFDs, the main thing here is as long as your transaction value is 25,000, you'll be able to open a transaction. There's no minimum amount as such, as long as the amount of shares you're buying is worth at least 25,000. With single stock futures, there's no minimum, but obviously we talk about one contract. So the single stock futures are standardized contracts. One contract is equal to 100 shares. Over here, you can buy as many shares as you want to, as long as it's worth 25,000. Okay. So first of all, it's capital efficient. So with both single stock futures and CFDs, you're putting down roughly about 15% margin, which gives you about 6 times gearing. So putting down 15% margin to have 100% exposure, you got 6 times gearing. So the underlying share moves 1 rand, your derivative moves 6 rand. So that's an advantage of that. So you got that gearing. But also more importantly is, as I say, you're only putting down 15% margin. On CFDs, it's 15% for the top 40 stocks. So 15% of the 25,000, you're putting down roughly about 3,750 Rand initial margin, a good faith deposit. If it's a top 40 stocks, a mid-cap stock, that's the next 60 companies from 41 to 100, you're putting down 17.5% of that 25,000. So that's 4,375 Rand. So a bit more margin you need to put down. On single stock futures, there it works on roughly about 15%, but you'll see it's Rand value. I always say that the single stock future gives you bigger bang for your buck because it's Rand value on a quarterly basis. Okay, single stocks on a daily basis, that 15% can change. Okay, you see brokerage fees are very similar, 0.4% for CFDs plus VAT. That's very, very cheap compared to putting into equity, for example. On single stock futures, there's a bit more costs involved, 0.4 plus 0.1% market maker fee, plus a booking fee, which is about 60 Rand on the opening leg of the transaction. So every time you open a transaction on single stocks, you'd be paying a broking fee, only on the opening leg. Okay, so single stock futures, the costs are a bit higher, but then the interest rates are lower. Okay, remember, if I'm putting down 15% margin, I'm borrowing the other 85%. Okay, so the interest rates might be a bit lower. With single stock future or CFDs, the costs are lower, but the interest rates are might be a bit higher. Okay, so those are the 2 very popular ways. So you can use the CFDs for what we call position trading or swing trading, which is holding it from a few days to a few, from a few days to maybe a week or so. Position trading from a few days to a few weeks to a few months. Okay, single stock futures are ideal for what we call the swing trader, from a few days to a few weeks. Where currency futures also very much for the swing trader. Okay, so currency futures, the great thing about here, especially those business owners that are involved with imports and exports, here's the one way to minimize that currency fluctuations. So you have exposure to exchange rates, or obviously major exchange rates. There's 7 currency pairs you can trade on. Okay, so it's the dollar against the rand, the euro against the rand, the British pound against the rand. Okay, so again, initial margin is roughly about 15%. So the contract size, just understand, there's no minimum, but you have to buy obviously one contract. It's 1,000 of the underlying, so it's 1,000 times the dollar rate, the rand rate of the dollar. So let's say, for example, the rand is trading at 15 rand to the dollar. So your exposure will be 15,000 rand per contract. If the rand is against the British pound is 20,000, 20 rand, your exposure is 20,000. Okay, but again, you only need to put it on roughly about 15% margin to have exposure to that full 15,000. You can also see the costs are very cheap. 17 rand 54 ex VAT, just for the brokerage fee. Every time you buy and sell. Okay, if it's a same day trader, buy in the morning and sell in the day, lunchtime or in the afternoon, only pay the one leg of the transaction. Okay, so that just gives you an idea of how derivatives can give you some extra income and leverage. It's more capital efficient. So I should highlight very, very briefly, this is just an idea for you to get an idea. This is a trade on Aspen. So it looks very complicated. So first of all, we're going through our charts and things like so. As a trader, trading derivatives, you're using technical analysis charts, and this is just from viewpoint. So first of all, I see that Aspen is overbought at this point in time. So yes, I've got some hindsight is perfect science, but I want to use this for education purposes. So first of all, I see it's overbought relative. This is on the MACD. Doesn't mean it's overbought for a long term. So it's been a nice little ride. We had this break out of this channel. We had this very strong rise up, and then we formed a bit of a head and shoulders formation. So that's your left shoulder, that's your head, and that's your right shoulder. So with head and shoulders chart formations, I can draw a neckline in. As minute breaks at neckline, that's my trend line. It's my trigger to get into the trade. So in this situation, I've got a head and shoulders. I want to take advantage of a falling market. So with single stock futures, especially, I can take advantage of falling markets. I can go short. So in this situation, that's as I say, in this situation, I can see the high for the head is at 278 rand. The low, if I can measure from there to there, okay, and then I can use that same distance and project from the breakout. That's where my target price would be. So I've got a entry price. Okay, my entry price would be there. That's my target price, and I'm using the previous high or the head as my stop loss. Okay, that's my SP. So again, yeah, there's my stop loss. My entry price is at 243. My stop price and my target price. Okay, so those are three important prices I need to know. So in this situation now, remember, we're talking about risk management. We're talking about stop loss. So that's number one. Number two, what's important is to use what we call position sizing. So how much capital am I going to risk per trade? And I'm using just example of 100,000, and I suggest 100,000. Less than that, you got less flexibility and things like that. Obviously, more funds you got, more flexibility. But on 100,000, we always work on a 2%. Okay, I'm willing to risk 2% of my capital in this situation, 2,000 rand. So 2,000 rand divided by my stop loss, between my entry price and my stop loss, between my entry price and my stop loss, that there equals to 11 rand 26. So that divided by my 2,000 divided by my stop loss, okay, that difference there will give me 177 shares or 178 shares. Round it off will give me 2 contracts. So on Aspen right now, those 2 contracts, okay, so remember, 1 contract is equal to 200 shares. So my exposure is 48,784 rand. I don't have to put that money down. My December contracts right now is 3,461 rand per contract. I need 2 contracts. That's what I need to put down, 6,922 rand. Okay, so that's what I'm putting down. So in this situation, I decide to buy. My entry price is 249. My target price is 197. That's where I anticipate it's going to go. I've got a potential of making 9,330 rand. That's what I put down. My exposure might be 48,000, but that's what I put down on my own money. I have the potential of making 135%. Okay, obviously a bit less than that if you take in consideration my costs. So there's my costs. So remember, 0.4% plus my 0.1% market makers fee, plus my booking fee. There's my VAT. So that cost me 341 Rand to open my open trade. Okay, it's 48 Rand. Okay, there we go. Well, target price, if I had a sell, if it means that yes, we've bounced up a bit, but I'm still, I might move my stop loss back to my entry price just to lock in a bit more. But at this point in time, I'm still anticipating this to come round down to this level here, okay, which is still above his 200-day moving average, so and above his long-term trend line. So I might come and test this line here sooner or later. At this point in time, I might be having a bit of a heart attack as the market's going up, but I'm objective. It's still above my stop loss. Okay, so if I had to sell out and we've reached my target price, I'll be paying ultimately 567 Rand in brokerage costs, which is about 6% on my profits, which is not too shabby. So guys, I just hope that just shows you this one way, and this can be, you can see that this is a few days, 2-3 weeks, less than a month, okay, to make a 9,000 Rand. Okay, so that's one trade. You might have 2 or 3 trades like that per month. Okay, so I hope that gives you a bit of idea. So I'm running out of time here. So in summary, obviously passive income, my main idea is to get your money to work for you. You can set up multiple income streams for consistent cash flow. And that's, remember, the idea here is cash flow. So have an equity account, have a CFD account, single stock futures account, and a currency futures account. Those are all methods of creating multiple income streams. Okay. You can also go the unit trust route, but there's pros and cons. Okay, that's what I want to highlight for you guys. So before we tackle any questions, well, let me tackle questions and see what questions you guys have. Okay, here's a question from Marnitz. Okay, how much time does trading take? Okay, good question, Marnitz. Okay, so right in the beginning, obviously it depends a lot. It'd be a lot of time in the beginning when you're setting this all up. So you can spend a lot of time learning. You'll be learning more about the products. So you can learn about CFDs, you can learn about single stock futures, you can learn more about technical analysis, you can learn more about methodology, using chart patterns. I think the most important with trading is risk management, position sizing, and things like that. Also, I think it's important, especially if you're a novice, to understand how the share market first works. So I suggest open up a share trading account first, understand supply and demand and all those factors before moving on to single stock futures and CFDs. So what's important is mindset. Greed and fear are the 2 biggest enemies in the market. So it's just setting that mindset. If you can learn to be objective, you're halfway there. How much can I start with? As I say, with Latlache, I don't know how to pronounce it. It depends. We're obviously single stock futures, depends on the margin. CFDs, the minimum there is 3,750 Rand, but I suggest you have additional funds. So ideally, 100,000 Rand if you want to take full time and trade successfully. Worst case scenario, I say at least 10,000 Rand. Okay. But coming back to your question, Marnitz, once you understand the market, understand you've learned and things like that, I found that Sunday afternoons was the best time for me just to create my watch list of the interesting trades I might put on for the week. And ultimately it gets down to about half an hour a day, 15 minutes in the morning and 15 minutes at night. And I think that time is worthwhile spent if we can create these different income streams. Okay. So start part-time. Those of you that are still employees and thinking of starting your own business, think of the stock market as a business, trading as a business. Okay. So I hope that, guys, helps you a lot. This is like, is any other questions? I hope that answers your question. I'll say this: 100,000 for trading, minimum 10,000 Rand. Because remember, it's not only your initial margin. You might have variation margin on top of that too. Okay. Cool. Looks like that's all the questions. So in conclusion, guys, I've touched on a lot of different products. I suggest going to our website, whatever tickled your fancy. Go click on this little link in the presentation. It'll take you to the website. It'll take you to the key information document. I think first thing you have to understand is how the product works. Secondly, obviously learn more about either investing or trading and things like that. But bottom line, I'm there to help you. Any questions you guys have, you're welcome to send me an email or drop me a call. But as I said, this webinar will be recorded. I will be sending it out as well as this presentation to you guys, hopefully either today or Monday, or today or Friday. But from my side, guys, happy investing. There's my contact. You can send us an email at wealth@PSG, or you can tackle us on the OneStream line is 0868 000 368. But guys, from my side, I hope this helped you. All the best. We talk to you guys in the new year. From my side, bye for now.